Well, good morning, everyone, and welcome to today's session on tax and trade in a digital economy. My name is Steve Olson. I'm a senior research fellow at the Heinrich Foundation, and I'm delighted to have this opportunity to moderate what I'm sure will be a very interesting discussion on a critical topic. As the importance of the digital economy continues to grow by leaps and bounds, we're also coming to understand that it's posing significant challenges in terms of taxation policy and revenue collection. As firms now increasingly have the ability to do business in multiple jurisdictions without establishing a physical presence, it has given rise to, shall we say, some very creative approaches to managing tax liabilities. Now, traditionally, trade policy and tax policy were largely separate fiefdoms, separate silos, but we're now seeing that the trade people and the taxation people have to spend a lot more time talking together and coordinating their policies. In any event, we've got an absolutely top-notch panel with us this morning to help us unpack the issues. We've got Deborah Elms, who is the founder and executive director of the Asian Trade Center. We have Peter Mullins, a tax advisor and former deputy division chief for tax policy at the IMF, and Juita Mohammed, an Indo-Pacific fellow at the Perth U.S. Asia Foundation. Now, in terms of format, I will ask Deborah to kick us off, provide about 10 minutes of remarks, providing her perspective, and in particular, some key points from a recent paper, an excellent paper that Deborah did for the Heinrich Foundation on this topic. If you've not already had a chance to read it, I strongly suggest you do so. It's available for download at heinrichfoundation.com. After Deborah's presentation, I'll then turn to Peter and Juita for their comments, for their remarks. Then we'll open things up for discussion and Q&A from the floor. Now, I'm sure everyone's been in about 10 million of these Zoom webinars already, so you'll be familiar with the format. If you'd like to pose a question, use the Q&A box at the bottom of your screen. I will try to get to as many of those as I possibly can. Please help me in that endeavor by keeping your questions as short as possible. All right, then, I think that takes care of the preliminaries. So with those out of the way, let us commence. Deborah, could I ask you to provide your comments, please?
Happy to do so. Thank you very much. I assume someone there is pulling up my slides. So let me just say, delighted to be here. We have been doing a series of papers. Thank you so much on the slides. We've been doing a series of papers with the Heinrich Foundation at the Asian Trade Center on the digital space and on a set of emerging issues. The first one earlier this year laid out some of the broad brush strokes of challenges that we face in the digital world. The second paper that we did, which I also can recommend to you, is on payments. Electronic payments and some of the issues around electronic payments, particularly for cross-border trade and especially for smaller businesses. This third paper in the series, which we're going to talk about today, is on tax and trade in the digital world. We just released one with the Heinrich Foundation last week on digital sovereignty, and please do sign up for the upcoming webinar that will cover digital sovereignty and what that means for, especially for the digital space. As you might imagine, as a trade organization, we care a lot about that. And the paper that we're currently working on is on competition policy in the digital space as well, because the whole point of the series is really to say there are a number of emerging issues, many of which have not really been explored very thoroughly or not been explored thoroughly by the trade side, even if they may have been explored well by, for example, payments companies or tax scholars. We haven't really thought about many of the trade implications of some of these policies, and so that's what the series is about. And I'm going to go into a little bit of detail about this paper that we wrote. Let me just say at the outset that this particular paper is largely aimed at a trade audience. So as Steve noted, there's two different groups that we're talking about here, tax and then trade. The tax people have their own language and whatnot. The trade people have, up until now, had the luxury of being able to say, that's not my problem. That is someone else's issue. That's finance ministries, that's someone else, but that's not me. And the point of the paper was to say, among other things, actually, that is you. And you do need to pay attention, and you need to start following some of the debates on the tax side. And the tax people need to start listening to some of the trade discussion, because otherwise we're going to make a mess of the digital space, and particularly digital services, digitally delivered services in cross-border settings. And even e-commerce trade in goods is going to get disrupted if we are not careful about how we design tax policies. So next slide, please. So these are not new topics. Of course, we've been talking tax for a long time, and I'm sure my tax colleagues on the call will be able to tell you just how long. I have no idea, because as a trade person, I never paid attention to tax. But now, like most of the people on my side of the house, we have to pay much more attention to tax than before, especially with the rise of the digital economy. And so we can no longer sort of go, that's not my issue. That's not just finance. It's not just central banks. It's actually now trade, including ministries that don't pay attention to this at all, like your digital economy folks, your services negotiators, et cetera. And so trying to get coordination is difficult, particularly, as I'll mention at the very end. Trade doesn't have a natural location to think about the tax trade nexus. And so we have a number of looming challenges in trade. Firms can become a micro multinational. That's one of the big promises of the digital economy. So you can be in your living room or bedroom or whatever and sell goods and services globally. You don't need to have a registered presence. You don't need to have a registered tax ID number anywhere. You don't have to have a distributor. You can just sell from your living room. That creates some challenges for the tax side. The digital economy, as we'll talk about quite a bit, of course, is easily scalable. And so that means that you get natural monopolies. As more people want to be on platforms with more eyeballs, you get, sort of a reinforcing approach that you don't get elsewhere. And again, that's a big thing of our competition paper we're working on right now. And then another challenge around the tax and trade nexus is that even the smallest firms are suddenly global traders, and they are going to be caught out by many of these new tax policies. So the next slide, we'll go into this in a little bit in more detail. So you don't have to have that local presence. Now that conflicts, those of you on the trade side will recognize that conflicts with many trade agreements that say you don't need to have a local presence, but actually to pay for taxes, you may. So we have some challenges here. Lots of firms have minimized their tax payments. Now I should note at the outset, most of that is legal. So I'm not trying to suggest that firms that have minimized tax payments are somehow cheating. They have taken advantage of the rules, and they have managed to shift production or profits or whatever to be in locations where tax burdens have been minimal. But that the overall effect of that is to highlight to governments, there is revenue out there you are not capturing, and you need to do something. So those approaches by firms have led to lots of discussions about the tax. And all of you may be aware that the OECD is meeting today to discuss changes on part of tax, which I'll talk about in just a second. There are more and more firms engaged in cross-border trade. Many of them are very small. They require coordinated responses, but they tend to be ad hoc and piecemeal. We don't have a lot of thinking yet about what does it mean if we change the tax regime for trade. And I think we haven't really paid enough attention to the damage that can be caused to domestic firms who are engaged in importing and exporting, and the cost of collecting this revenue, especially by smaller firms. And the compliance cost for all firms is going to go up, but it's going to fall particularly hard, as it always does, on the smallest companies that are trying to be those sort of, champion micro multinationals, but tax could really impede their ability to do so. So let me go briefly into some of the specifics. Next slide. I'm going to just mention a couple of things very quickly. One of the problems that I see in looking at this from the trade side is trade folks, when they talk about tax, lump everything together and just call it tax. So they include direct taxes, which are, as you might imagine, taxes paid directly to the government, corporate tax, income tax, property tax. Much of the discussion right now in the OECD and elsewhere, which I'm sure will be a conversation today, are about direct taxes. But the real challenge, or a challenge that we really wanted to flag for trade is actually indirect taxes, and the potential for inconsistent application of indirect taxes like sales tax, value-added taxes, VAT, or goods and services taxes, GST. Those are particularly challenging for businesses that are trying to trade cross-border when they are inconsistent. And so when the trade side says tax and they lump all of this together, it makes it even harder to understand the implications of that. So what we've done in the paper is pull them apart a bit. I'm going to talk less about the direct tax issues, and I'm going to talk a little bit more about the indirect tax issues, because I think this is underappreciated. The next one. While we are waiting for the larger direct tax issue to be resolved, I just want to highlight this one challenge here, which is many governments, starting in Europe but extending elsewhere, have decided to solve some of their revenue challenges around collecting revenue by imposing what they call digital services taxes. So digital services taxes are a bit different from what I'm going to talk about in a minute on value-added taxes, because they're trying to tax the gross sales rather than the profits. And because of that, we end up with a whole new set of challenges, including potential violations of World Trade Organization or WTO rules on non-discrimination. And you can end up having double taxation if you're foreign, because you're paying tax twice, two different ways. And you can end up with capturing a lot more companies than you anticipated, because often the thresholds for the collection of a DST is very low for the digital space. And so firms that are not large are suddenly having to pay DSTs, and they're very inconsistent. So I just want to mention this. There's more detail on that in the paper. But what I really want to talk about is the next one, which is on the indirect taxes. And again, I assume that my colleagues on this call will talk more about the direct taxes, the BEPS projects, all the stuff that the OECD is doing. And again, I urge any trade people on this call to please pay attention to that, because it will have trade implications as well. And the paper outlines that. But because I don't have a lot of time, I just want to talk about the challenges of indirect tax. The real problem is, how do you collect tax from firms that do not have a local presence or a tax registration in your market? How do you collect this VAT from them in particular? It's meant to be a tax that doesn't go to the firm. It's meant to be collected on behalf of the consumer, basically, and then remitted to the government. But it's a challenge for managing this in a cross-border space, even for large global goods companies. But when you talk about small businesses, the complexity is such that small businesses are really going to get caught out by this, because we have inconsistent policies. The VAT levels are different. You need to have tax IDs in different jurisdictions. It gets very complicated very, very quickly. We haven't had a lot of indirect taxes, especially on services, digitally delivered services. So some of these problems haven't really arose yet. And we haven't really collected a lot of these indirect taxes in Asia. So we don't have as much experience, but I think if you look at the information that's in the paper, you'll see this is going to be a real hassle for small businesses, especially. Next slide. So some of the challenges is you have to remit payment, right? So I have to pay taxes, let's say in Indonesia, and I've got to do it in local currency in Indonesia. So that's difficult. The value of that can vary tremendously, from 5% to 25%. And so now, as a small firm, I have to know what is the tax level that I'm going to have to pay wherever my consumer purchases a product or service from me. And so what often happens to smaller firms is that they assume that the VAT is whatever their VAT is. So 7% if you're in Singapore, let's imagine, you assume that that's everyone else's. And then suddenly you get hit with a 25% VAT, and that's the entire margin on your good or service. So that's a real challenge. Then how do you actually pay that tax? So what's been happening not very consistently is that you get someone else to do it for you. So you use, if you're selling goods, you have an e-commerce platform that will collect and remit on your behalf. If you're or you could use a financial services firm. You could say credit card payments or payments of any kind, they should manage the VAT, or a shipping and logistics firm should collect the VAT. All of that actually, ironically, reinforces the power of platforms, which is one of the things that many governments complain about. But if I'm a small business, my alternatives are I do it myself. Complexity, compliance costs, the risk of getting it wrong is very high, or I pay someone a fee to do it for me. And so, yes, I'm losing money, but at least they're solving my problem for me. And the end result is, I think many firms will actually move more quickly into larger firms and platforms. But they're also going to have higher costs, because you're going to have to pay somebody to do this, either yourself or someone else, to manage these really complex VAT and other indirect tax policies. The next one. And I just want to illustrate this by an example, and I'm going to try to wrap this up quickly because I know we don't have a lot of time, but I think this really gets at the crux of the problem. So as you all know, we've been dealing with COVID. And the challenge for higher education in COVID has been really fascinating. Typically, governments don't apply VAT to higher education. So if you go to college, no tax. But under COVID, lots of schools and students were switched to online delivery. Well, VAT GST schemes often apply to electronically supplied services. And so suddenly universities were getting a bill for up to 20% VAT for online course delivery out of nowhere, right? So that's a 20% increase out of nowhere for many higher education facilities. They went, what? And then they had to figure out, well, how do you even know what is the rate? What if the student is not in the same jurisdiction where they go to class? What if they've gone back to their local community and they're at a different location? Do you apply the VAT from there? Do you apply the VAT locally? What if they're a permanent resident in a third location, but they ended up stuck somewhere else? What happens if their computer system has the IP address from the college, which is local? We have very different taxes getting paid for very different students. Many universities that have paid VAT GST may have had to pay taxes twice because they may have had to pay in one jurisdiction and another, and then trying to unsort this is really a mess. So you can see from this simple example that navigating inconsistent VAT especially is really problematic. And I think this nicely illustrates some of the challenges. The next one, next slide, sorry. Has to do with time and payment delays. I'm just going to mention this very briefly because I'm running out of time. But the key problem for small businesses particularly is that tax is paid the minute the purchase is made. And so it may take a long time, and I can testify, it can take months to actually receive payment into your account for many services that are delivered these days. But you have to pay tax instantly. So you have a mismatch between when the revenue is due, and the tax revenue is due to the government, and when the payment comes in from the customer. And that can create cash flow problems, which is particularly hard for small businesses. And you can't get registered. So even if I wanted to register in different markets, getting a valid ID or tax registration number can be really difficult. And the lengthy delays to process tax, the time required to process tax can be enormous. And if you need a refund, heaven help you, it's 55 weeks in many places to get a VAT refund. And by then, many small businesses, like, they're out of business. Next slide. So the challenge, and this is my last slide, is to say, what are we going to do about this? Well, I think the first big problem, and the first big issue, and it doesn't sound important, but I think it's critical, is to recognize there's a problem. So I think the fact that the trade community has dismissed tax for so long is a real problem, and they need to stop doing so. And I would say the tax side needs to recognize that there are trade implications of many of their policies and start thinking about how that works. We don't have a lot of institutional methods for that sort of tax and trade connection. APEC does, but they don't quite work the way they should. ASEAN does, but they don't always talk about the right things. And so that's a problem. Trade agreements, because many people will ask me about trade agreements, typically carve out exclusively, they carve out explicitly domestic tax and excise taxes from discussion. So that doesn't help us resolve this tax and trade tension. And while we have a global trade body, they don't have remit to think about tax, and there's no equivalent global tax body. So even if you wanted to have better coordination at the global level, it's unclear how or where that would sit. And so the net result of all of this, and the reason why, again, we wrote this paper and we're very happy to have everyone here on this call, is to start what we hope to start some of that conversation around the tax and trade nexus in the digital space so that we can start solving some of the challenges before they become too entrenched and difficult to unwind or unravel. So with that, let me just stop there, and I'm really looking forward to questions and comments from the audience. Thanks so much.
Thank you very much, Deborah. I certainly fall into the category of trade people who have not been thinking enough about tax issues. So thank you very much for your timely paper. A reminder, if you haven't seen it yet, it is available for download at heinrichfoundation.com. All right then, Peter, could we move on to you? I'd be interested to hear your thoughts and commentary as well, please.
Thanks, Stephen, and thanks, Deborah, as well, for your presentation and the nice paper. I think it, at least for me, highlighted again that tax reforms are not just a revenue issue, but they do have broader implications, including trade implications and also implications for small and medium businesses. I found that particularly interesting. the trade issues for the smaller businesses. Because I am the tax person on this panel, I do want to cover talk a little bit about from a tax perspective. And the way I'll talk about it, I think, is covering those three broad areas that Deborah has talked about: income taxes or direct taxes, digital service taxes, and then a little bit about the value-added tax. I think the first comment I'd want to make about the direct taxes reforms and the proposals is that it is a complex issue, and there is still quite a way to go before some of these proposals are resolved. Many of these proposals reforms have been led by the OECD and the Inclusive Framework, and they arise out of the Base Erosion and Profit Shifting Project, or BEPS as it's known around the world. And there were 15 BEPS actions, and of those 15, 14 of them were basically concluded. At least some recommendations were made on 14 of the 15 by about 2015. But there was one issue that was outstanding, and it had to do with this digital taxation question. And it's now 6 years since then, and it's still not quite resolved. And I think that highlights just how difficult an issue it is. It was also complicated by the fact that early on in the reforms, a decision was taken that that digital activities wouldn't be isolated from the broader, wouldn't be given special treatment necessarily. And so the idea was that whatever reform came into place, that it would apply across the broader economy. And where we are at now is quite a fundamental reshaping of the international tax framework. And because of that, that's caused some of the delays as well. I think Deborah in her paper provides a nice summary of what they call Pillar 1 and Pillar 2 of the reforms. Pillar 1 is around allocation of profits to ensure a fairer distribution of profits across countries from large multinational enterprises. And then Pillar 2 is around a global minimum tax so that countries can protect their tax bases. And it's, of course, an issue that has received a lot of media attention in recent days. I think there's a couple of challenges going forward. I mean, one is reaching agreement on the details of the proposals. So in the case of Pillar 1, there's still question around of what percentage of profits will be allocated and even how they're going to be allocated. What's the formula that's going to be used? Will it be sales? Will it be assets? Will it be some combination? On Pillar 2, there's still debate around what might be the minimum tax rate and even what tax base will be used for purposes of Pillar 2. The second issue is that most of these reforms require countries to change their own laws in order for them to be implemented. And there's no guarantee that many of the 130 countries that have signed up are actually going to be able to get these laws through their parliaments, their legislative bodies. If you take the US Congress, for example, already there's suggestions that the US Congress won't be able to pass the necessary laws. So there's still a lot of challenges. And there are also kind of doubts, some have even raised questions about, do these reforms go far enough? Should there be much broader reforms? Why are we only allocating some of the profits, not all of the profits? And so there's a number of measures around, or at least a number of questions around the measures. It's also worth noting that the UN has also proposed some changes around double tax treaties to try to pick up this the digital economy. As was raised earlier, the current system relies very much on a physical presence for tax purposes, not just for trade purposes. And so the United Nations, in its model, which is used by many developing countries, has suggested that, or have actually recommended that the model tax treaty between countries changes so that they also recognize a digital presence, or at least digital transactions not requiring a physical presence. And that measure may impact more on small and medium enterprises than the OECD-led measures. The interesting thing is the revenue implications. And if you look at the OECD estimates of the impact of Pillar 1 and Pillar 2, they suggest that it will raise around 50 to 80 billion US dollars per year, which is around about 2 to 3% of global corporate income tax revenue, which is not necessarily a large amount in terms of the total corporate tax revenue. The IMF recently released a paper around digital taxation in Asia, and they estimated the revenue impact might be less than 0.2% of GDP. So around 1% of total tax. Again, very small. The interesting thing about it is they estimated that the investment hubs like Singapore and Hong Kong would lose revenue, while some other jurisdictions like Japan would actually gain revenue. So, one question may be, well, why make the reforms? But I think part of it is that it will reduce the tax planning opportunities for the large multinational companies. And some of the allocation of profits will help developing countries in particular who are in desperate need of revenue. So the second tax I want to just briefly cover is around digital services taxes. As Deborah has noted in her paper, there are two broad ways that this is done. One is through a specific digital services tax. And if you look across Asia, there's a range of tax bases, some very narrow, some very wide, and a range of rates as well. And then there's withholding taxes. So you withhold tax on payments made to non-residents, mainly in terms of royalties. One of the interesting things is in Asia, digital service taxes are not widespread. In the Asia Pacific region, I think I've estimated around 7 out of about 50 countries have these taxes, but they are gradually being adopted by more and more countries. Again, they're not a significant revenue source, but they do help in protecting the tax base. And they also provide a level of fairness in that businesses that are operating locally, foreign businesses are not at a competitive advantage to businesses operating locally. And there's also a political dimension, of course, because it looks good to be seen as though you're imposing taxes on these big companies. The interesting thing is that under Pillar 1 and Pillar 2, one of the conditions is that these taxes be removed. However, there's already started to be some resistance. For example, India has recently said that there should be a gradual transition because many of these countries rely on this revenue, at least even though it's small, it's still a source of revenue. The last one I wanted to mention just briefly is the VAT. And again, Deborah has covered this well in her paper. What many countries are doing now is requiring foreign firms to register for VAT in their country and to pay VAT on any digital services provided into the country. In Asia Pacific region, around half countries have adopted this approach. My experience in developing countries is that the large firms like Netflix and those kind of providers have said they're willing to pay the tax as long as the process for registration and filing is simple. But as Deborah notes, it's going to be a bigger issue for the small and medium enterprises. One solution might be to have a higher VAT threshold for those foreign suppliers so that only the larger businesses have to pay the VAT. The only country in Asia that does this is Bangladesh. Most of the others just rely on their existing VAT threshold for domestic users, which is often quite low. So I think in summary, I think the proposed tax changes will be positive from a revenue perspective, but there is a long way to go in implementation. And I mean, the VAT changes in particular are important for now. And as Deborah has said, but there will be implications for trade and investment flows. Thank you. Back to you, Stephen.
Thank you, Peter, very much. Your comment about the potential difficulty in getting some of these reforms through domestic legislatures really resonated with me. I can't even imagine the process that the Biden administration is going to have to go through to get some of this through the United States Congress, given the political environment in the United States today. So point very well taken. Joita, could I ask you to provide your comments, please?
Yes, thank you. I would like to share my comments through my presentation. I'll share the screen now. I apologize for my cats in the background. They would like to be in the presentation as well. So my topic for today as part of the comments would be to highlight Malaysia's case study as we aim to tap into the digital economy as a new source of growth in Malaysia. So again, for Malaysia, the digital economy, including the e-commerce sector and also the information technology sector, It was estimated to be valued at around 270 billion ringgit. And during the pandemic, we saw that digital trade was a boon for businesses and MSMEs across Malaysia to survive and to continue safeguarding livelihoods during the pandemic, during the lockdowns. So when we looked at the first lockdown implemented last year in 2020, digital platforms like GrabFood and also Food Panda recorded an increase of 30% total orders since the beginning of last year. So when we talk about laws, I am happy to report that there are some updated laws and that have been introduced by the Malaysian government when dealing with e-commerce transactions in Malaysia. So the relatively new laws would be on the Consumer Protection Act of 1999. So again, the primary legislation on consumer protection in commercial activities, including e-commerce, is already have been introduced. And in 2012, which is relatively new, again on consumer protection for electronic trade transactions, regulations was also introduced. And these regulations are prescribed, have prescribed a certain requirements that must be complied by the e-commerce traders in Malaysia. So when we talk about different taxes in Malaysia regarding e-commerce, is divided into three parts. So the first part is of course the income tax. And in 2019, the IRB issued guidelines on taxation of electronic commerce transactions, again to guide the income tax treatment with regards to the e-commerce transactions. So the next one would be on the service tax on digital services, which was already presented by Deborah. And again, this is very new, effective on the 1st of January 2020. Digital services provided by registered FSB to Malaysian consumers will be subject to 6% of service tax. Nevertheless, we are not so certain about the enforcements just yet, how effective it is, especially when these foreign service providers are not, as you mentioned, Deborah, before, are not in Malaysia physically. And the last types of taxes would be, the issue would be on legality and the scope of e-commerce. So again, the consumer protection regulations of 2012 specifically governs two different groups, mainly the e-commerce traders who are doing business through personal websites, and also websites provided and maintained by e-commerce market operators. So those are more formalized and, and also the I don't know why. Okay, I apologize. Yes, and the other group will be the e-commerce market operators in Malaysia. The e-commerce traders are the popular platforms are the Mudah.my, Lazada, and also Shopee. So in terms of taxation laws, those laws have already been introduced, but again, the enforcements and also the tax collection is still an issue. And again, other issues in Malaysia would be what types of platforms the MSMEs are using when it comes to marketing their products. And still, because you have to understand, most of the MSMEs in Malaysia are in the informal sector. They mainly use MSMEs during the pandemic and before the pandemic, they mainly use media platforms like Facebook, WhatsApp still, and also Instagram to do their businesses online. And according to a report in 2020, 18.7% of the respondents chose to market their products on Shopee platform, while about 15% uses the Lazada platform. And again, those are some challenges, but in Malaysia, there are also hardware challenges whereby, fewer businesses with websites, and also there are fewer secure servers that per capita income would predict if we were to compare to other countries. Again, this came from a World Bank publication. And my colleague and I, we talked to several SMEs, and we found that MSMEs, they digitalize in Malaysia using still very basic and very fundamental technologies, and they don't use more complex digital solutions. And this again caused them to lag behind larger firms because they have more capital to invest in more complex technologies and also systems. So around about 77% of the digitalized firms are actually MSMEs in Malaysia, but only a quarter of these firms are adopting advanced digitalization tools. And again, here, when we went to the round and talked to different government agencies and also different MSMEs, they highlighted that in Malaysia, when you talk about tech startups, there are a couple of more issues like lack of technological capabilities, lack of proper local talents to support these tech startups, and also there are inadequate education and also training programs available. And another issue would be on financing to support startups and innovative firms. And this is very important for Malaysia to be able to support and keep our unicorn businesses. And another problem that we found when we went on the ground is that even though the onboarding of MSMEs are being widely pushed for by the federal and also the state governments separately, unfortunately, there is not enough emphasis on data management and data protection. And again, when we look at issues related to cybersecurity, this is a very concerning issue, especially when categories such as fraud and also intrusion consistently registers high cases per year here in Malaysia. So again, going forward, we have many different things that we need to look into, but first and foremost, we feel that MSMEs need to be able to tap into grants. And with this, a very effective one-stop center is very much needed. And we also found that even though the Malaysian government has given different grants for MSMEs, we found that different types of businesses with different progression or different investments would need very different support. So even with ample grants available, if the solutions applied are not suitable for a given MSME, the funding will go to waste. So again, the government should be encouraged to pursue awareness programs on digital rights and also cyberspace, which is very much lacking here in Malaysia. And we've also highlighted that in terms of certification, it is very expensive for MSMEs. So again, a program that could abridge cybersecurity practices found in data management best practices should be included in these awareness programs. That would be all for me. Thank you.
Well, great. Thank you very much, Juita. I think Malaysia provides a real interesting case study for so many of the issues that we've really got to start thinking carefully about. All right, everyone. Well, we're now with those three excellent presentations providing a real good table setting for us. I think we're poised for an interesting conversation. If you do have any questions you'd like to pose, please enter them into the Q&A box. We did receive one question from a participant, which actually tracks with something that I've had on my mind for quite some time, and I'd like to pose first to Deborah, but then I'd be interested if the other panelists have thoughts as well. With all of these new burdens that seem to be coming down the highway that will fall probably disproportionately on SMEs, do we run the risk? Is there any chance that we're just going to turn off SMEs on international trade, that they're just going to throw up their hands and say, this is too difficult, we're not going to be involved in international trade?
Yes, yes, we will. And again, there are lots of challenges that you have if you're small. You can't get paid, you can't get remitted in the right currency in payments. Logistics is complicated. You're having to deal with paperwork you've never seen before. Tariffs are hard. But this tax one is a new challenge, and it could really make it impossible for firms, where they just will say, you know what, frankly, I love you as a customer, but no, unless I have a lot of revenue coming in from your market and I can really think about it, or I'm working with a platform that can solve this for me, I just can't. And that's difficult because, again, the promise of digital, and we keep banging on about this, but I think it's true. The promise of digital is that anyone can become this micro multinational. And if we make it too complicated for firms, they can't participate. So let me just flag one statistic that I just found fascinating about the Malaysian example. So you'll note that the tax thresholds in Malaysia start at $500,000 ringgit. So you say, oh, well, that sounds like a lot, but actually $500,000 ringgit is just over 100,000 US. That is a very small revenue threshold across a 12-month period in order for you to have to pay taxes. And so if you're a small firm, just imagine how this works, right? I have to register because I would like to think as a small business that I will clear $100,000 in a year. And if I don't, then what am I doing? So I have to register in anticipation that I will clear that threshold and start paying taxes. Whether I do or I don't clear that threshold, I have to be ready for it. And so then I would have to do it in Malaysia. I would have to think about the similar thresholds in potentially Indonesia or Thailand or India or whatever. Each time I do that, that adds complexity to me. So, I might not have a formal, what many trade and tax people seem to think of as formal way. I sell off Instagram, I sell off Facebook like most Malaysian SMEs do. I'm still supposed to pay taxes, and so that, again, that is another level of complexity that to me ultimately means if we don't get this right, then your small businesses are going to remain domestic and they won't grow. And they won't grow in the way that they would if they could find consumers in different markets who appreciate their goods or services. And they don't have to, those consumers, and the consumers by which I don't just mean you as a private consumer, but your consumer could be another firm. They're not going to buy from you if it's too complicated for them either. So this goes both ways. It's not just that small firms can't sell, it's that consumers, either you personally or your business, will not be sourcing from small businesses if the complexity gets too high. And so that's part of my worry with this tax, in particular tax at the moment, because I see growing problems that I don't think have been really appreciated, understood, factored into the conversation. Now, this is tricky. This is very tricky. How do I manage to capture revenue that's appropriate to make sure I have a level playing field, but also allow trade to flourish? That is not an easy sort of nexus to navigate, but I think it's vital that we sort this out or we strangle our small businesses.
From your point of view, Deborah, are there any practical ways we can mitigate at least somewhat these headaches and burdens we're potentially creating?
Well, I think it would be so in general, you want to increase certainty and lower risk in general on everything. If we had more consistency in policies, we would be better off. So if, as an example, we were to say, if you're going to impose a VAT on cross-border digital services, as an example, the VAT should be pegged at X amount, let's just say, either the amount that you're paying, 7%, 10%, whatever it happens to be, or the threshold needs to be Y, and it needs to be consistent. So then I either clear the hurdle and I know that generally where I sell, I'm going to have to pay or I'm not going to have to pay, but it would be consistent. What is really a nightmare for small businesses is this inconsistency between markets, where it's thresholds, it's payment terms. So some governments have the VAT has to be remitted in certain like quarterly tranches or whatever, reporting out every quarter, and some don't. And like, you never really know. You don't really know what the rules might be. They're not translated. They're not delivered to you. And so you're going to find yourself caught out with potentially huge risks and penalties, fines, et cetera, for failing to pay tax. And I think that inconsistency is a problem. But then we get back to the, like, where would you have that conversation to be consistent? And we're not there yet. But so my modest effort on this is to say, this is a problem we should be paying attention to, and then let's start paying attention to it and sort it out.
Thank you. Thank you. Peter, Juita, any comments or thoughts to share on this topic?
Look, maybe just a couple of comments. I mean, I agree with Deborah on that threshold issue that that there is a lot of variation. And I know you mentioned 100,000 for Malaysia, but there's many countries in the region that are below 100,000. I mean, there's a couple that are very high. I think Singapore and China are around 1 million. But most of the countries would be at 100,000 or lower. And I think a lot of the reforms have really, as I said earlier, have really been focused on the multinationals. And, you know, this whole question around tax planning and, you know, the big firms like Amazon and Netflix and Alibaba and all those kind of firms operating in the country and trying to capture tax from them. I'm not sure policymakers have given a lot of thought to the impact on the small enterprises, other than that question around level playing fields. But I mean, there's a whole lot of issues that Deborah's raised around compliance costs, even being able to collect the tax by tax administration. So I think, you know, the only forum that really could deal with this at present is this international, the inclusive framework, which is this 130 countries that have come on board to look at some of the BEPS issues. But VAT is not really in their scope of consideration at present. So there is a lot of challenges still ahead.
Thank you, Peter. Juita, any thoughts you'd like to share?
Yes, I think the threshold is a tricky issue indeed, because for MSME grants in Malaysia, they use that same threshold for firms to be able to get tap into the grants. So again, I don't think they were thinking, or they thought that this would be an issue, and this should definitely be flagged.
Thank you. Thank you. We have another interesting question from the floor. If implementation is the issue, should the focus of international cooperation be on making collection easier and avoid double taxation? Any possibility of using digital technologies like digital IDs, collection window, etc.? Any thoughts on that?
There is an effort, and I know that, as an example, ASEAN is currently working on digital IDs. If you had a digital ID, it would be easier for, potentially easier for this revenue collection. But that's going to have a whole new set of challenges attached to it. And recognizing cross-border digital IDs, I can see could be problematic. I mean, we have been working, you know, we work with a lot of small businesses, because in our trade association, the Asia Business Trade Association, we have a small business arm. And some of our small businesses cannot get themselves registered for tax purposes in their own markets. So we had one company that's trying to sell essential oils, and they couldn't get the government to allow them to register as a company because they didn't meet the standards, the local standards for essential oils, because there aren't any. So they have been on this incredible odyssey trying to figure out how to create standards for their products so that they can then qualify against those standards, so they can get a local ID number. And in the meantime, you can imagine this is not only difficult for them because they can't do business locally, even, really, not legally at least, but they really can't do business cross-border because they don't have an ID number. And then you're trying to pay them. And we, as we discovered, unfortunately, trying to pay them means paying to a personal bank account, which is a disaster. Now we've got all kinds of problems of trying to pay personal bank accounts for business purchases. And so you just think about, for me, I think about that essential oil company. And I think, if you can't register locally, how in the heck would you register in another jurisdiction to pay taxes in that jurisdiction? Even if we somehow came up with a consistent tax ID, which I think is, I still think I'm going to be dead before it happens. That is not necessarily going to solve all of our problems either, but we got to think about this, because otherwise we do run the risk of sort of, you know, certainly not a level playing field, unfairness, and catching firms out. I mean, even firms that are really trying very hard to do the right thing just keep getting caught because it's just too complicated and it's too inconsistent. And, you know, so needs to be sorted out. That would solve some of it, maybe. But again, if we're talking about the MSME sector, which is, depending on the markets, up to 90 something, 95% of your businesses are small. How do you get that number, that the volume of small businesses into a consistent place where they can have taxes collected domestically? Most of them are informal, so they're not paying domestic taxes. Now you want them to pay cross-border taxes. I mean, this just gets really complicated really quickly.
It sounds like an absolute nightmare scenario for that essential oils company. I can't even imagine what they had to try to cope with. Thank you. Are there any other thoughts on this topic?
Maybe just two quick thoughts. I mean, one was, I agree with Deborah that countries have enough trouble trying to sort out their own tax identification numbers, let alone, trying to do it for foreign companies operating in their country. I mean, the other question, which is an interesting one, is that around this question of double tax or no tax, because again, a lot of the international tax framework is around direct taxes, income taxes, but doesn't really focus much on value-added taxes on the basis that, it's always what's going on in the country, the consumption in the country, to the extent that there are imports that you can capture value-added tax when the import comes into the country. And if it's an export, you don't impose tax. But of course, that all assumes most of these things are goods, and that, there's a physical product that you can see coming into the country. And so with the digital, the whole digital transactions, it's a much more difficult thing. And the tax system really hasn't been, certainly the systems to stop double tax and non-taxation, which is usually done through a treaty, very rarely touches on value-added tax. So I think there is a challenge going forward that these treaties need to consider that, and not just deal with asking companies to register and pay tax in the country, but also to work out, well, what are we going to do with the potential for double taxation?
Thank you, Peter. Thank you. Any other thoughts or comments on this topic?
I just want to talk about double taxation for a second. Many of the small businesses don't pay taxes because they are informal and it's too difficult and you can't get registered in many markets. But many firms do pay taxes. And so it's not that, let me just be clear, they're not paying taxes. They are paying taxes, and many of them would be willing. I mean, nobody wants to pay taxes, I don't think. I've never met a person who was like, yay, I'm paying taxes. But they would be willing to pay foreign taxes if they had to. But the challenge is, how do we ensure that they can do so, and that the compliance costs are not atmospherically high? And so I think when we talk about double taxation, we have to remember it's not just large firms that have this. They have a whole team of people who can sort it out. But these smaller firms that potentially are, in fact, paying taxes in more than one location on exactly the same goods or services. And that is a real problem that is going to continue to grow as the digital economy grows, and as these taxes get applied, especially to digitally delivered services, where we just don't have the system in place to figure out how do we handle this multiple ways of paying tax. And we have on the trade side, especially for trade nerds, real discrimination possibilities, because it's only the foreign firms that might end up with this double taxation. Local firms may not. And so then how do we handle this discrimination issue in the tax space when we're not supposed to discriminate in trade, but we don't really talk about tax? That's going to get very complicated very quickly too.
Just maybe one other point is that I think that one of the reasons, like the reason that you can avoid double tax, at least double value-added tax on goods, is that exports are usually or we call zero rated. There's no tax on exports. But once again, many countries have looking at imposing tax on imported services, but often their laws are silent, or their tax administration doesn't know what an exported service is, or they can't even identify them. So there is that potential for double tax. And again, if countries were better defined what are exported services and gave the same treatment that they gave to goods, then some of those double tax issues would disappear.
Thank you, Peter.
The point of a value-added tax, and this is where it gets complicated, is that you're supposed to take the taxes that you paid on the whatever it was, and then you add the value, and you're only paying tax, as it suggests, on the difference between these two, the value that you added. And that's what you're paying tax on. That is very hard to work out, even in goods, actually, but in services, it's even harder. And so, just the basic concept is really challenging, let alone in a cross-border context. So again, more thought about what this actually means on the ground, I think, is really important, or we're creating systems that either are going to kill off trade or are going to be violated left, right, and center. And then, that's not good either, because now we're inconsistently applying taxes. And that is not great for anybody either.
Thank you. Thanks, Deborah. Joita, if I may, I'd like to sneak in a question for you. You described very clearly some of the challenges facing Malaysian companies. What are some of the policies the government is implementing to help empower those companies and strengthen the digital economy in Malaysia?
Thank you, Stephen, for the question. Recently, in 2021, the government has launched or published the My Digital Blueprint. So this is the first blueprint that addresses the need to strengthen the digital economy and digital trade activities in Malaysia. So again, this framework would have around 5 years to be implemented on the ground. And again, it's still early days, but governance in the digital economy is already being addressed, and for different pillars and different working groups, different ministries, and also stakeholders are working together with different timelines. So all I can say is there is a blueprint. Things are moving behind the scenes as we speak. But again, the timeline is 5 years, and we have a lot to cover, especially on taxation.
Yeah, well, thanks, Joita. I think we'll all be keeping a close eye on how events unfold in Malaysia. We've got a question for the floor. I think it's open to anyone on the panel. Digital platforms are the new area of regulation, tools of trade, and even FDI. What would you recommend for ensuring that tax issues are well understood, very SME friendly so far? I think we'd all agree with that. Any thoughts or comments?
Again, we're really thinking hard about this now because we're working on this competition paper. So one of the arguments that you hear frequently in Asia and globally is that the platforms are too powerful and that the platforms take too much money, especially from small businesses. So they charge, let's say, a 30% fee. That's unfair, it's inappropriate, et cetera. We can debate whether that's true or not, but I would say that as we get more complexity, including on this tax issue, the more likely it is that you're going to have small businesses say, actually, I can't operate independently very easily. To be able to sell off Instagram or my own website is just getting harder and harder. And so I will then move. Even if I hadn't before, I might then say, actually, the platform is better for me. Yes, I give them 30%, but they sort out all this stuff for me: the tax, the logistics, the payments, the inventory control, the marketing even. I mean, sort of all sorts of things get taken off of my plate, and I just focus on what I'm supposed to be doing. So if you're a goods company, I think that you're going to find more companies, smaller businesses moving onto platforms than before as the complexity grows. Services is a bit trickier because we don't really have the equivalent for services yet. I don't know why, but nobody seems to have invented a really good, Lazada or Shopee for services, which I don't know why, because you could certainly have a platform that does every graphic design and landscape design and consulting services and education services and tuition and mental health and whatever, all in one platform. So note to VCs out there, please do that, because I think there's a missed opportunity. But increasingly, as these taxes hit services firms, I think they will be looking for a marketplace or for a financial services company who manages it for them, or for somebody to do this, because again, the compliance cost for a firm is just going up and up. And so giving it over to a platform and let them handle it is where I think we're going to go. And then that runs headlong into government concerns over competition and dominance of platforms. So we have this interesting tension that I think actually gets worse the more complicated you make the world for smaller businesses.
Thank you. Other thoughts?
Look, I mean, I think I agree with what Deborah said there. And I mean, one of the things that countries are trying to do is to reduce some of the compliance costs for small businesses, but it's fairly patchy in how successful that is. Trying to simplify lot filing requirements and simplify payment arrangements and so on. But as I think Deborah raised in her presentation, it's one of the key issues, especially if you're dealing across cross-border transaction, is VAT refunds. And in many countries, 55 days, 55, was it 55 days or weeks? Weeks. That's not bad for some countries. So that really, breaks down the effective tax system and the desire of a value-added tax system not to impact on exports and to allow free flow of cross-border trade. So there is still a lot of steps to make, and in particular around the VAT refund issue.
Thank you. Any other thoughts? Joita, please.
Yeah, I agree with Deborah, because last year there was a backlash by the public concerning regarding the 30% taxation for digital platforms. And until today, nothing has been done by the government, for example, to introduce certain new thresholds or so it has been an issue, but as Deborah mentioned, that if you're not a part of a digital platform, it's even harder for you to market your own goods and services online on your own. And most of the merchants in Malaysia during the pandemic were heavily dependent on GrabFood and also Foodpanda and all of these digital platforms to survive.
We see that there is a movement in Asia now to talk about that fee, the fee in particular, which is not necessarily tax related, but a little bit tax related, because many times it's the platforms now collecting VAT on behalf of their sellers. We do see that there's a movement to get rid of that, or to lower it, or to require that you have other payments providers on there to reduce the fee, or reduce the fee in general. And I'm not a platform, so I have no idea. But my guess is that there's a cost attached to a platform for doing this as well. And the more that they get small businesses on there, the more their costs go up as well, because they have to register all of those small businesses. They don't know when they start whether your SME from Malaysia is going to sell a lot of ballpoint pens or not. So they have to assume that you're going to break through the threshold and register you in Malaysia and in Indonesia and in Thailand and et cetera, because a platform doesn't want to go, oh, well, actually, we didn't register this one for that market. They'd have to just register you, and that cost is high. So the idea that somehow you can drive down the costs of operating a platform for the firms on that platform, I think is actually going in the wrong direction. As governments make trade more complicated, it could potentially go up. And then again, we go back to Steve's opening question, which is, does this hurt small businesses? Yes, because if they can't get on a platform with reasonable fees that they find that they could manage. Again, nobody wants to pay fees, just like no one wants to pay taxes, but at least it's manageable. You know what it is. And you can't do it yourself. Then you're left with what? You have to just sell in the domestic economy and hope for the best. And even that's not easy in many markets.
Thank you. Thank you. Peter, if I may, I'd like to get your perspective on something. We've been talking a little bit about the fact that trade policy and taxation policy operates as largely separate silos, as largely separate fiefdoms. From your perspective and in your experience, do you think that gap is starting to narrow a little bit? What's your take on this?
That's a good question. I'm not quite sure whether the gap is narrowing. Certainly in the work, and I've worked in many countries in the region advising governments around tax policy reform, and we rarely ever touch on trade policy. Generally, the only times we talk about trade policy is where there are tariff reductions. So, for example, there's a regional trade agreement coming into place and countries have to reduce their tariffs. And generally in that context, we focus on how the government can raise revenue to offset the loss of revenue from the tariffs. The other area where we sometimes comment on it is in terms of taxes on exports. And, we talk about international competitors, and you don't want to impose taxes on exports for that reason. But having said that, generally in most countries, we do try to meet with the trade ministry. And obviously we always meet with the finance ministry many times. But what I find in most countries is that the trade ministry doesn't know too much about what the finance ministry is doing, and vice versa. But in some countries there is some cooperation. So I suppose an answer to your question is probably not. The gap is not narrowing. And I mean, even in terms of the issues that we've talked about today, I haven't seen much discussion around, what the implications of taxes on digital services might be in terms of trade in digital services. So I think there's still a way to go.
Well, let's hope that discussions like this and papers like the one that Deborah produced will push us a little bit further down that road. I'd like to come back to Deborah. Deborah, as you know, I'm a trade guy, so I bring a trade perspective to these issues. I'd be interested to get your take on how you think we could iron out some of the potential WTO non-discrimination issues that these new tax requirements potentially will raise.
That's a great question. I'm not sure that I have an answer to that. And I think part of the problem is that the trade people who should focus on this, and especially the trade lawyers, of which there are many, have been focused on other issues. And, tax, again, just feels like someone else's issue. It's foreign, it's remote, it's full of acronyms. I mean, trade feels like it's full of acronyms, but I find tax even more like BEPS and OECD and Inclusive Framework 1 and pillar this and pillar that and AML, KYC. I mean, like so I think that conversation just hasn't yet reached the trade side, especially the legal trade people, in a way that makes them go sit up and take notice and say, actually, you know what, there is a problem here that we should think about. And then let's sort of puzzle through what some consequences might be, what kinds of disputes we might have, if any, how we might effectively resolve those, how we deal with consistency. And I would argue, and of course, this is going to be a tough one, but I think tax is going to have to be added to the WTO's overall agenda as a topic. They may not negotiate on it. They may not be making rules on it, but they at least should have it as a discussion point at the WTO. But given the total dysfunction of the WTO, the odds of them adding something like tax to their agenda has got to be near zero. So I think we're far from having solutions to possible legal issues or possible discrimination challenges, partly just because of lack of knowledge, not because it's not happening or won't be happening. I think it's just lack of knowledge for the people who would have to try to tackle this. So hopefully conversations like this one in this paper get picked up a bit more widely and thrown into the hopper, and then we can discuss what are we going to do about it.
I think you're right about the need at some point for the WTO to probably have to take up taxation issues. But my goodness gracious, given the other challenges that they're facing, it's just mind-numbing to think where that might go or where it might not go in the WTO. But yeah. I do think you're right.
I mean, I heard an interesting discussion this morning because I was on a different thing talking about the World Trade Organization's upcoming ministerial, and someone said actually the agenda items or the list of concerns that governments have brought to the WTO to say please address this at the next ministerial conference is as long as your arm and then some. They said, oh, this is great because it means that governments are still enthusiastic about raising issues in this global environment and they want to do it at the WTO, and isn't that great? But the list is long and really complicated. And so, yeah, you throw tax on top of, everything from agriculture and services and small businesses and digital and climate and gender and sustainability. And then you hit tax at the bottom of that list. And I think you really will lose the current director general of the WTO, who's apparently already threatening to quit, even though she's just barely been on the job, because it's just such a implacable set of challenges with 165 members.
She apparently hasn't bought any furniture yet, and I think it's unlikely she's going to go out and buy
She's
it.
I mean, I'd be loaning her a sofa, please. You know, here's a comfortable couch. Don't go anywhere, because if you lose the fairly enthusiastic support of a sort of rock star at the top, I think then that's a whole new level of complexity. So I'd be giving her all the lovely furniture that I could. Please stay in Geneva. Here's a beautiful apartment. You know, don't go.
Indeed. Well, look, ladies and gentlemen, unfortunately, I think that brings us about to the end of our time today. I'm sure all of the participants join me in a very sincere thank you to our panelists for a very lively, important, and interesting discussion. The session has been recorded, is being recorded, and will be available on the Heinrich Foundation website, heinrichfoundation.com. If you've not already gotten yourself acquainted with the Heinrich Foundation, I sincerely recommend you do. We've got a very robust research, international trade research program, as well as an education program, and a number of other interesting events like this. So please do go to heinrichfoundation.com, take a look at what we're up to, and certainly subscribe to our weekly newsletter. Well, on that note, ladies and gentlemen, once again, thank you very much to our panelists, to all participants, and I wish you a very good morning. Thank you very much.
Thank you.